This episode is brought to you by Harmony. Please stay tuned for more information about them later in the episode. What is up, everybody? I'm Scott Melker, and this is the Wolf of Wall Street's podcast, where twice a week I talk to your favorite personalities from the worlds of Bitcoin, finance, trading, art, music, sports, and politics, basically anyone with a good story to tell. Today's guest is a certified legend in the crypto space. As the CEO of both FTX Crypto Exchange and Alameda Research, SBF is known for his talents in arbitrage trading, building fascinating tech, creating top-of-the-line trading systems, and bringing crypto to the masses. The last time I interviewed SBF was last December, so it's safe to say that a lot has changed in the past 7 months. It's my hope that he will share his thoughts on what's going on with the market, what it may take to turn things around. I also want to talk mainstream adoption and the massive moves being made by FTX in that direction. Sam Bankman-Fried, thank you so much for being here once again.
Thanks for having me.
So listen, the last time you were on, I asked about how you manage 6 screens at a time and the effects on your neck. Now I want to talk about your beanbag chair and if that's one of the secrets to becoming a whale.
Oh, certainly. I mean, you can't do it without that.
Is it literally impossible to accumulate wealth without a beanbag chair?
That's right.
So do you just go back and forth between your main chair and the beanbag chair, depending on the mood?
Yeah. Well, I usually go to the beanbag to rest or sleep, and I mean, it's certainly not always the most comfortable bed in the world, but it's super convenient, and it's sort of right back there. And the other things that helps me stay in sort of a work mindset and keep a lot of the context in my mind that I'd otherwise sort of like lose for a full night's sleep in another venue. So I don't know.
Do you ever get a full night's sleep, or are you always in work mode?
Yeah, so I do sometimes. I mean, I slept a lot over the last day, actually, probably a good solid 12 hours or so. But I think more generally, like I'll often take a 2 different 4-hour naps over the course of a day or something. Maybe it totally depends. And it really depends on my schedule. As much as everything else, like just sort of when have things been scheduled. And part of the problem sometimes is I'll have calls scheduled with people like all across the world, and so I'll have sort of like little kind of splashes of calls at 4 different segments throughout the day, and I'll kind of look at like, I see that period there, kind of got nothing going on for those 4 hours. Like, it looks like a tempting period to sleep.
It's pretty intense. So listen, as I touched on in the introduction, you're pushing obviously crypto towards the masses on a level that I don't think we're seeing anyone else doing. And it's funny because I've seen the criticisms where people are like, well, Major League Baseball, that's not a crypto audience. And I kind of shake my head and say, that's kind of the point. Marketing to the same people
Right.
that already know about you seems pointless. So can you talk about the moves that you're making, why you're doing it, and what you think the future impact of that will be?
Totally. And I think a lot of this comes down to where we came from as a company. The fact that a lot of the success that we've had because of our product. And I think that's always been the thing we felt proudest about, and the thing that we feel like we really have a lot to offer this space. And on the flip side, we're really late. We didn't launch anywhere till 2019. We didn't launch in the US till 2020. And by that time, there's already some adoption for the biggest players. And so I think it's sort of like part of it is like we think we're ready in terms of getting in terms of really getting more getting our name out there more, getting more sort of adoption and more users. We also have sort of historically been lagging behind in terms of mass users. And so I think for both of those reasons, we're pretty excited to be getting out there more. And I think part of your point about which audiences are we targeting? Well, I mean, the answer is I don't know, all of it, right? The answer is like anyone who might be a crypto user at some point. And of course, the hope is that that's a lot of people. And so we're sort of thinking about like, well, what are the things that could really reach a lot of people?
Is that why you're going for sports? I mean, it's obviously it's expensive. I have to imagine to be, you
Yep.
know, have patches on Major League Baseball umpires and to partner with Tom Brady and the arena everybody knows. So, I mean, you have to have a very firm belief that this is going to be something that's mainstream and that everybody is talking about or interested in.
Yeah. So it's there aren't that many things that reach really a mass audience, and that reach a mass audience in a way that is actually engaging and that people actually care about. And I think sports is one of the few things that really brings people together. Um, and so when you're thinking about what are things that tens of millions of people follow closely and really care about, like it's a short list. Um, and so I think that's a lot of it. Another thing I'll say sort of on in terms of the cost is, I don't know, and these are always sort of weird things to think about, but um, it costs uh it's not cheap, certainly. But it's not like I don't know, we're sort of in a fortunate place where it's actually not nearly as much sort of as like the scale of a business. Um, and so it's not one of these things where it has to triple the size of our business to justify
Right.
itself. Um, and so I think that's sort of like a key piece of it. And part of what we're thinking is, look, like when you look at like who is the typical FTX user right now, like who's the person who is most likely to be an FTX user? It's someone who spends 6 hours a day thinking about crypto, right? It's someone for which crypto is a lot of their life. But it's actually not easy to just take dollars and turn it into adoption amongst that demographic. It's very easy to take a lot of other things, to take energy, to take time, to take product and turn it into adoption. But dollars are actually not exactly the currency that matter the most there, because they already know who FTX is. It's not like we have friends from out there like, oh, FTX, that's a crypto exchange. Yeah, maybe you should think about that. Like, no, they've already spent 30 hours of their life thinking about FTX. So um uh and so I think that it's really on the mass adoption front that you see much bigger returns to to branding and marketing.
Well, I remember you sort of breaking down actually in our last episode that your donation to Biden, and that if you extrapolate out the numbers, how little actually 5 million is relative to the impact that it could have depending
Yeah,
on who wins. I have to imagine you think of it sort of the same way. That it's not,
yeah,
you don't need a direct metric in ROI on dollars in a certain amount of time to know that it's really cool to have the Miami arena in your name and that people are going to see that for years. And maybe the 20th time they walk in that arena, they sign up for the
yeah.
exchange.
And sort of, right, exactly. And sort of one way to think this is, I don't know, more or less than a 2% increase in our business. Like, that's sort of, the bar it has to hit. And from that perspective, like, I don't know. I mean, it's like, 25% of the sort of like mass branding, that we've done. It's how a lot of people who have heard of us know about us. It's, I think it's one of these things where it's not even just about sort of direct user base growth. It gets our name out there in a way which is really hard to replicate with other things.
Yeah, that makes perfect sense. And if it's really a 1.1 to 2%, if it even completely quote unquote fails, just the PR around it and the news
Right.
covering it seems worth it almost in that
Exactly.
regard.
And people are thinking about, well, what have you gotten so far from it? And on the one hand, I think actually a fair bit. And the other hand, like, it doesn't even start it. Like it's, I mean, it's like we haven't even started the first NBA season in which we have the arena, and already it's paid off a decent amount.
Yeah, that makes sense. I'm curious, and everybody's probably asking you, but Tom Brady and Giselle, I'm just
Yep.
curious the evolution of that, and if you guys effectively got him interested in crypto, if he was genuinely interested, and then you approached him because of that, and it evolved that way.
So it's actually not quite either of those. We approached him and a number of other people, not knowing how interested they were or weren't. Um, and and then after approaching people, we sort of learned pretty quickly that he actually had already been interested in crypto. And I think that's one of the things that made the deal actually come together. Is that it was something that, I mean, they're just actually excited about this. and that made us a lot more excited about them.
That's so awesome. And so when you guys are considering these sort of endorsement deals, ambassadorships, are you casting a wide net, sort of, as you just said? I mean, because Major League Baseball maybe wouldn't come to mind as the first place to go. I don't know, or is it people come to you knowing that you guys are actually open to or amenable to these sort of sponsorships that maybe other people haven't done?
So we approach people and people approach us, but honestly, there's a lot of adverse selection here to the people who approach you. We've had, probably half of all the professional sports teams in America reach out to us at this point, but they're not reaching out to us usually about the most desirable partnerships they have, right? They see that we've done one, they know it's worth an email, and then they send us the thing that they're having a lot of trouble offloading on anyone else. And so the really popular thing right now, frankly, it's the NBA jersey patches
Right.
are the popular thing for to try and offload on someone. And what teams are doing here is, there's sort of like two metrics to look at this. One of which is like, well, we've also looked at, we've looked at stadium naming rights, and a jersey patch is about 2/3 the cost of a stadium naming right, which is a lot. Considering that like the naming rights are huge. I mean, sort of, everyone knows about those. The jersey patch is like, I don't know, name to me an NBA jersey patch, right?
Well,
It's
I
like
can name you
none.
one because I saw it in the news this week, which is the other
Right.
crypto, Stormex on the
Exactly.
Blazers, but I had never heard of or thought about it before in the past.
Exactly. And so on the one hand, it's just like no chance it's worth 2/3 of a stadium. Like that seems off by like a factor of like 5 to me or something. Or another way to think about it is it's like, comparable sort of, comparable sizes, like patches for one NBA team or, all of MLB. And it's sort of like, I don't know, you just get these like kind of skewed ratios here, which make it seem pretty clear that like these things are not being really efficiently priced by the market, and that like, they're not, I don't think they're worth what they're going for. But what's happening is that teams just realize like, oh wow, I can like get sponsorship for another thing as well. Like, why not? Um, and so anyway, we get reached out about a lot of things that we have no interest in, from the sponsorship side, and we tend to sort of like, uh, uh, really tend to like hold off until we find something that we're really excited about that we think might really move the needle with prospective users.
It's incredibly interesting to me to hear how you assess the opportunities, because it just sounds like trading.
Yeah,
Looking for an inefficiency and an opportunity that perhaps has has disproportionate upside,
exactly.
and taking that.
And I think that's been one of our biggest takeaways from a lot of this is that, yeah, there's not that much magic to this. In the end, it's not like, oh, like, if you don't know the rain dance for endorsements, then like, well, obviously you're not going to make good decisions, like it's sort of like, I don't know, you sit down, you think about it, you think carefully about the impact it'll have, you run it by a lot of people. Like, you can actually sort of get a sense of like, what realistically speaking are the impacts of the various things that you can do. And yeah, what's the highest return impact thing that you can do? What's the thing you can do which is going to have the biggest impact on potential users, given whatever resources you're spending on it.
Yeah, I think that the greatest football player of all time, and
Yeah,
arguably his wife, who's probably the number one supermodel of all time, probably swings in the disproportionate upside direction.
exactly. Right. It's not like we're like, well, we did all these branding studies and they surprisingly told us that Tom and Giselle were popular. Like, no, I mean, like, no, that they are, it's
But
sort of argued that way.
But I would imagine that most people who are doing these sort of endorsements, ambassadorships, are probably hiring the classic team of PR agents and agencies who are digging into the focus groups and numbers. And it seems that you're
Yeah.
above that.
That's sort of a sense, not that they don't matter, but that like, that's sort of like not all there is to it. And that a lot of that can be replicated with like, well, I don't know, who do you think polls the best? And our sense also is that some of the mistakes people fall into here is that they end up listening too much to like, they get in this weird position, where they have like, they have their committee or their, whoever it is, whether it's sort of an agent who isn't really aligned with them, whether it's a committee, whether it's their budget department or and whatever, somehow they end up in a position where like they make a decision, oh, well, we could do X or we could do Y, and they sound semantically quite similar, but Y is only half the cost. So let's do Y. And they consider it like a good business decision and huge cost savings. And what they've done is that they've changed from like, Tom Brady to like, the 12th best quarterback in the league right now. And it's sort of like, yeah, that I don't know. I'm not saying they're not good, but like there's a reason that there's a discrepancy there. And like if you sort of stop for a second and just like ask like literally anyone you'd ever met, like anyone, like what they thought the relative values of those were, they actually would have gotten it more right than your process did.
Oh, hundreds of times. Hundreds of times, because the Tom Brady's a unicorn, right? I mean, the
Exactly.
difference between Tom Brady and like Eli Manning on whatever. And
Exactly.
Eli Manning's actually a huge name. He's won some Super Bowls, but there's no one else.
There's no one else, right? And it's a classic that you trade Manning brothers or something for like a 30% discount, right?
So true. Guys, I'm really excited to be sponsored by Harmony. I know all of us have traded their coin one in the past, but what they're fundamentally doing is a game changer. Harmony is your open platform for assets, collectibles, identity, and governance. Think of it as the one to bridge all blockchains. Harmony is open and insanely fast with 2-second transaction finality and 100 times lower fees than Ethereum. Their secure bridges offer cross-chain asset transfers with Ethereum, Binance, and almost every single other chain. Maybe most exciting is that Harmony, in cooperation with Sushi, will be providing $4 million in incentives for liquidity mining. Find out more about this program and build something yourself at thewolfofallstreets.link/harmony. That's thewolfofallstreets.link/harmony. Build on Harmony, run on all chains. So listen, if you're able to assign a theoretical ROI on the naming rights and if it's worth it, that means that you have an idea of the value of FTX. I'm not asking you to give me a number, but how do you get a valuation of a company like yours that's growing so incredibly quickly? The metrics are changing on a month-to-month basis, I would imagine. We just went through this massive bull run,
Yeah. And I think one of the interesting things we see here actually when we go through this, especially when we talk to a lot of other, outside people about it, is this interesting confusion where sort of what happens is we don't quite naturally fit into any of their boxes. On the one hand, it's like a fast-growing tech company, and they have a box for that, like fast-growing tech company is a well-known paradigm. But on the other hand, it's like already a pretty profitable tech company. And there's also a paradigm for that, but there actually basically isn't a paradigm for like fast-growing profitable tech company that's young, right? It sort of like fits awkwardly somewhere in between the like, growth fintech bucket, and like, the sort of like public market, mature social media fintech type things. And so that's definitely something actually that's like makes it a little bit more complicated to value, because it's not clear how you put those together. But I think that when we think about it, there are a few pieces. One, obviously, we have numbers. We can just look at where are we today, right? Another thing we can look at is where might we be just really straightforwardly in the next few years if you don't project out anything that we think is like, probably won't happen. And you only project out the things which like, the growth that seems like the most likely for us. And you don't project it out with, 100% probability or anything, but you just think, well, okay, here's sort of like a demographic we do quite well with, like we've been growing quite quickly with it. Here's how big the whole space is in terms of that. Here's how big we are, and from that, here's sort of an amount of growth we might get from it. And so I think that's sort of like, another approach is looking for like the most straightforward potential pieces of growth, and then looking at like, what would our business look like after those in terms of, revenue, basically. And we're fortunately in a position where most of the things that we're doing aren't super cost intensive, right? And so because of that, there isn't so much this like really complicated sort of like, well, okay, that's sort of the revenue side, but like, are you going to be profitable at it? Are the costs going to outweigh it? Sort of like, I don't know, like it's like, trading fees, they're net positive, like, it's sort of how it is. Like, I'm not super worried about us net losing money on trading fees.
Right.
And so that's sort of another thing. But then the third thing that we do when we think about the business is there's some things that are none of those. Like there's some things that are very different than what we're doing right now. And I think you look at things like FTX pay as an example of that. And frankly, you look at sort of the real consumer retail market where we are not very big right now, but obviously we're trying to make big plays in and think about, well, what does a market there look like and what might we be able to get? I think those are the kinds of things that we're adding together. And obviously, there's some more twists on it, right? Like, we're not just looking at sort of crypto native ecosystem growth because, we also have the equities, internationally. And I mean, have a broker dealer license in the US, like, it's pretty clear where that's sort of going and heading towards. And so I think all of those things are like things that play a role in it.
Yeah, it's funny to hear you say that the fast growing tech company, but fast growing tech company with income. It's like you're actually spending money you
Right.
made as opposed to spending money you
Money
raised.
that we're raising. Exactly. Right.
Which,
And it almost just doesn't compute in a way for something. They're sort of like, oh, that's sort of weird. Like, I don't know, we talk to these places, they have like two funds, right? They have like their growth fund and they have their like public markets fund. And they're just sort of like, it's just doesn't, it's like, it doesn't quite fit in either. Like and they're sort of like, look, I don't know, maybe we'd want to invest, but like, I don't know. We're gonna have to see if we have a fit for it anywhere. Like if we have any fund we've raised that has the right mandate for this.
yeah, you don't have like five angry guys in suits asking you why you made a decision with
Right.
their money.
Exactly. And I think that's also like the big thing from our perspective is like we have to be nimble. Like, the only way we've gotten where we have is by being nimble. It's by being able to adapt and by being able to do what's right for the company. And that's like super, super important to us. Like we don't want to lose that. And we don't like, playing through the valuation game. It's not a necessary game for us if we don't want to. And so, we certainly wouldn't want to do that at the expense of our ability to run the business the way it needs to be run.
Yeah, it makes you question how most businesses are run and the
Oh,
model
it
because
certainly does.
it literally just drives people towards trying to build a business to sell and not trying to build a business
Yeah.
that's the best business.
Oh, certainly. I mean, we had one call where, someone was trying to talk to us about, well, you should like build this product instead of this other product because it's a higher multiple product. I'm not doing higher multiple products. So like, well, companies in this sector tend to have a higher revenue multiple, like valuation to revenue multiple. Then this other sector, I'm sort of thinking like, all right, first of all, like, I really don't think we should be like building our company based on revenue multiples to valuations for VCs. Like that's not the ultimate game that matters here. And then second of all, this thing of like, well, okay, but what if one has more revenue, right? Like you're talking about sort of like the multiplier on revenue that you get from it, but like, what if one just actually grows the business? And it's a very weird conversation, but did sort of really strongly just make us feel like, look, like this isn't. A lot of people aren't thinking about this, frankly, in terms of like what's best for the business.
Yeah, but usually what's best for the investor. So that said, we just had this sort of massive bull run, obviously, and prices corrected. And it was just reported, I believe today, that across exchanges, it was about $1 trillion in trading volume in June after doing 2 trillion plus in May.
Yep.
So what do you think accounts for that?
I mean, I think it is just like, bull run sort of subsiding. And we saw really, really high volumes going up. In May, I think in June, what we saw was a few things. First of all, obviously a price decrease, also just a little bit of a hangover effect. A lot of people being more wary. We saw a lot of people saying, look, we're still going to do crypto, but we're just sort of like taking it slow for a bit, like getting kind of see what happens. It's been really non-volatile, all things considered.
Yeah.
In June and in July, and so like, it's not just sort of the price decrease, but like, a little bit of a period of consolidation for the industry, sort of as a whole. We'll see where all this goes, but there's definitely been a lot of sort of cooling off in a number of ways, not just sort of price cooling off. And there's just been this really, really big torrent of sort of bad news, coming out for crypto. A lot of which I think, frankly, isn't obviously that bad of news long term, right? And I think especially with the China miner ban, where frankly, I think if you'd ask people like a few months earlier, they would have said, look, a big risk for the industry is the concentration of mining in China. Like, what can we do to get miners out of there? But it's certainly it's not generally good news when there's negative government action. But I think also in general, this is just an opportunity for all the governors to dump their shit on Bitcoin. They sort of felt like, look, like we can't get rid of it anymore and we can't ignore it, but we actually do have a lot of like regulatory things we want to say. If we talk about regulating Bitcoin when it's extremely hot, no one's going to like us. So let's wait for the dip, and use that opportunity to say all the bad things we need to say about Bitcoin. I think we saw that across a lot of different governments.
Yeah, I mean, everybody's piling on, and it's not just governments. Obviously, when I think the governments start, then the media obviously
Exactly,
runs with
right?
it, and then you
Any
just get the fully fake news.
exactly, right? Like any bad story anyone had saved up, like, man, now's the time,
Yeah, you don't really think you're guessing about the reputational risk of saying things that are bad when an asset is running, from 10,000 to 65,000 in a matter of months, but it's really easy after a 50% drop.
Exactly, exactly. And it's sort of like, what gets ratings? Like right now, all of a sudden, you've got a lot of concerned people. And so if you can play into the concern, it's great. Whereas previously, you just had a lot of people looking to FOMO. And if you could play into that FOMO, that's what really got you there. So, I think that we're seeing sort of media cycles, which are starting to align with the market cycles.
Yeah, for sure. I'm curious if you think that huge drop is generally retail that speculated, it came in late and panic selling sort of because they're impatient and got scared they're going to lose everything they put in. Or do you think bigger players are actually unloading at this levels? I mean, there's a lot of metrics on chain that say that whales are accumulating, but we all know that it's hard to really gauge that just by looking at those metrics.
That's right. So I think it was both of those, but I think, I mean, liquidations were a lot of it, right? Like
Yeah,
you saw what, $20 billion liquidated in the few days of the
crazy.
biggest drop. And it's like, yeah, sure. You liquidate $20 billion of position. There's going to be price decreases from that, and so like, I think that was just like a big piece of this. And, outside of that, like, I think that it's not clear you would have had nearly as big of a drop without that. And so I think a lot of this was big players getting kind of forcibly selling, right? And then I think sort of like the cessation of the inflows. Like I think, we're seeing massive retail inflows during March, April, May, and I think that those have slowed down a lot. And so I think especially if you look on the platforms that are sort of notorious for huge, huge retail flow, I think that's where you'll see the drop off the most clearly.
Yeah, I mean, summer is historically slow. I mean, if you kind of look back, do you think that's what we sort of have to look forward to for the next few months? Is
Well, there's
maybe we
some of
just,
that. I mean, frankly, the summer slow effect happens in equity markets as well.
yeah. I
And
mean, everywhere. Yeah,
it's sort of, for those who don't know, I think the most common thought here is sort of like a surprisingly dumb one. Dumb is in like, oh, well, that's what moves market. What it is like, well, I don't know, it's summer, like they're beaches, like, the bankers, instead of like thinking about new deals, they're literally on the beach.
the
And so
Hamptons.
like, right, like literally, like there's less volatility because there's less activity because everyone is like getting off work at 2 p.m. on Fridays to go to Long Island. Um, and so there really are just like effects like that affect markets broadly, including now, probably crypto, frankly.
Yeah, it makes perfect sense. Sell in May and go away has been a thing for a very very long time. So
Oh yeah.
I, I'm curious with all this, as you said, sort of they were probably waiting to dump their news or their FUD on the
Yep.
market. How much of that, as an exchange CEO, concerns you that there will actually now be more regulatory action or anything that could affect your business?
So there certainly is going to be more regulatory action, and I think it was inevitable. Like I don't think this is causing a ton of action that never would have happened, but I think that like it's being expedited because of this. I think people really do see a good opportunity right now to regulate. And so I think I'm not sure it's bad for us particularly. I think, one of our advantages, frankly, is being, a sort of international global business that sort of understands, Western regulators and how to interface correctly, and is going to be responsive to them. But it's going to be a lot of work. Like I think a lot of this is like, licenses are coming out now at like a pretty steep rate, and so I think that like, and regulatory regimes like faster than sort of like we had been seeing before. And so I think that just means like, well, it's coming quickly. We have to be ready for it. And I think especially given the global nature of the business, often it's sort of like working on many things at once. We are sort of like, trying to coordinate with many governments at once right now to get licenses and stuff.
Yeah, I sort of joked with you last time that you probably had more lawyers than employees because of that. And you said something that was really brilliant. You said something to the effect of you'd rather stay up late than lose sleep,
Yeah,
I think was the gist. But I
yeah, I
imagine
think
now you
that's
have to
right.
stay up later.
Well, there's a limit to how late one can stay up in the end. But yeah.
Yeah, it makes a lot of sense. I'm just curious if you still view regulation sort of as the largest threat to everything that you're doing and to this market in general. Is there something else that we're missing, or is the Lindy effect fully employed and we're going to be here no matter what they do?
Yeah, I think like uh I don't see it quite so much as the threat to the business. I think it's a threat to some businesses. I think there's some companies in the industry that are going to have a hard time with regulators. Um, I think that for us, we see it as, a potentially socially valuable time sink. It's something which is it's going to be a speed bump because there's just going to be a lot. I mean, the number of forms that we're filling out is like, every time you want to try to apply for a license somewhere, it's like, all right, there's another 100 pages, but so be it. And so I think that like, we see it much more as like, a big thing that is going to soak up time and energy rather than, a fundamental threat to the business. But I think a lot of that is because, we've sort of been trying to build this business so that it makes sense in a regulated environment. And, we know that crypto is unregulated in a lot of jurisdictions right now, but that isn't going to be true forever.
Right.
And, you know, you can't always guess exactly what you're going to need to do. And, we're gonna be learning that as time goes, but you can at least sort of like build the fundamental blocks such that you think they're going to be compatible with where things are going to be going. And you can figure out some of the details later, but we want to build a business that fits into licensing regimes as they come out. Though the one thing I will say about that, and I think the most awkward piece of this, is that very, very few jurisdictions have come out with regimes for derivatives. And that's sort of like time and time again, what we come back to is like, there are some jurisdictions that are coming out with licensing regimes. For crypto exchanges, almost none of them are doing it with derivatives in mind, even though derivatives are 2/3 of the volume in
Right.
the space. But almost all of them, and it's not that they are actively saying we don't think we should, it's more than like, look, we haven't gotten there yet. This was step one. Come on, it's better than nothing. We'll get there. But I think it just means that like, for a lot of the international business, it's sort of a years long roadmap for there to be licensing regimes even.
So this is gonna be a long slog, basically, because I mean, the UK is the first I've even heard like of any of the huge countries talking about derivatives, and obviously that was just somewhat irrational. We're just gonna kind of ban it and see what happens.
Right. And I think again, this is sort of like they're like, look, we want to do something right now. We don't have time to do like it's I don't know. It's like, I don't know. They know they don't know how to build a whole thing right now. It's like, I don't know, what can we do overnight?
Yeah. So potentially, are we looking? I mean, you talked about the Chinese miner situation, which I totally agree. In my opinion, it's sort of a short-term pain for a long-term gain situation. Let the market absorb it. Let the difficulty drop. Let the hash rate drop 50%. But we know that it'll move more towards renewables and more
Yep.
decentralization. Is that how you view regulation as well? That we'll sort of have these events that the market will have to absorb, but long term, it'll give a lot of direction and there won't be the uncertainty.
Mostly with some caveats. And I think the big caveat here is it depends on exactly how the regulation, you know, what exactly happens. And I think frankly, you end up in a lot of places where like there's a lot of pretty reasonable pieces of regulation that I think would be helpful for the industry long term. Would give it clarity and legitimacy and probably help weed out some bad actors. I think are also some that are kind of poison pills.
Hmm.
And I think that the big thing that we're going to have to see is how does that shake out, right? And like, I think that if sort of regulators and industry were great at cooperating with each other as a general statement, it would end up good. Um, but I certainly wouldn't confidently make that as a general statement. And I think that like whenever you see breakdowns in communication, something that could have looked like, regulators say, hey, here are three things we're worried about. Industries like acknowledge, here are seven sort of caveats on this that are important context and are really important for the business. And regulators like, that makes sense. How about these two new initiatives? These seem like they'd be a little bit of pain, but wouldn't really cut at your core business, but that these would mostly take care of the problems we're thinking of. And then, industry would say, yeah, but can we please change this wording of this one? And regulators like, yeah, that's reasonable. And then all of a sudden you have a new licensing regime. That's not that's sort of the goal, right? But that's often not what happens. Instead, regulators are like, fuck you guys, the fuck are you doing? And then industries will fuck you too. And like, all right, if that's how it starts, right? And it sort of started with the regulators saying that, but maybe they weren't the first ones, right? Like maybe it starts with like someone doing something egregiously illegal, right? In this
Right.
space. And regulators are like, fuck that. And like the industries will fuck you. And like it could have been diffused at many steps in that process, Like it could have been like, okay, yeah, that really needs to clean itself up, but like that's not most of it, and would really like to talk to you about the rest of it. Um, but if you sort of end up on the bad path there, then what you get is regulators struggling to get done the things they need to get done. And when they do things, they sort of like almost accidentally, sometimes or randomly, end up as a big blocker for a lot of legitimate businesses because there wasn't this sort of like cooperative and cooperative interactivity necessary to come up with a version of it that didn't also shut down businesses. And I think that's the biggest worry is just like poor communication, lack of communication and cooperation leads to sort of strife on both sides.
Do you think that that's a two-way? I mean, you kind of alluded to it, but is that a two-way street, or do you think that it's reactionary by the industry to? I mean, we see these boomers and like the older, just basically with this blanket statement: criminals, energy suck, all the usual FUD, the Elizabeth Warrens and the Mungers and the
Yep.
Warren Buffetts, of course. So, do you think that the industry just reacts to that, or do you think that we do have some reasonable people on both sides, and it could happen? Or do you think
I,
that there's just too much of a divide in who's regulating and the nature of the makeup of the people in our industry?
I think it could happen. And, I think, right, like part of the problem is like if the industry cannot do really bad things to start with, that's going to start off on a much better foot, right? You never want to go into this with regulators feeling like, Jesus, we have to regulate the shit out of this. Like, this is
Yeah.
a nightmare. Where if they come out saying, look, we actually think it doesn't seem like that many very bad things are happening here, but like it's going to have to fit in some regime, then you can have a more relaxed conversation, about look, like what's the future of this look like? What are some productive first steps to take? Instead of regulators being like, all right, we got like a month to do something here. Like that's not enough time to come up with the regime we want, but so be it. Like we don't, you know, we're gonna have to run with the regime we get instead. And so I think that's one thing that can really help if, and look, like there are always gonna be times when regulators look at our business and they're like, yeah, we have a slightly different regime in mind. And we're like, okay, talk to us about that, about what you're thinking about there. And that's fine. What we never want to happen is a regulator looks at our business and is like, holy shit, like that's what they're doing. You can't. Come on, guys. It's like that's ferocious, right? We never want that to be the case. And if we're doing something like that, we're making a mistake. And I certainly would like to know about to hear that as soon as possible, so
Yeah.
we can fix that. But I do think it goes both ways there. And we've seen examples. It's on a call with a bunch of people and Singaporean regulatory body, and you know MAS was trying to be really cooperative and reasonable. And like again and again and again, they said, that's interesting. Tell us more about this. What's important here? Here's how we were thinking about it. Tell us if there are things we're missing. Like, lots of good overtures. I think we also see sometimes when governments will just come out and like just randomly ban shit, sort of like with no explanation or warning or cooperation. And so I do think that there's really spectrums on both sides.
I mean, the bankers get a full revolving door with regulators. So shouldn't we at least get like a little taste or something?
Right, you think so. And there's starting to be some attempts to do that. And I think it's gonna happen. I think it'll be good if it does. Frankly, like people talk, there are some really bad parts of these revolving doors, but there's some good parts too. Right. The hope is that communication can lead to like cooperative outcomes that are good on both sides, as opposed to just like, nepotism or something.
Yeah.
But I think a lot of people in crypto, I mean, everyone in crypto, myself included, just don't have the connections in the same way that the traditional financial industry does, and there's sort of a scramble to get those together, but it's not, it's not there yet.
So on the run up, obviously, I mean, you talk about how the regulators come down when price is down. We had some pretty exciting narratives on the way up that seem to have cooled off as well. Institutional adoption, of course, being one, institutional
Yep.
floor. But then, of course, supply side shock, outflows from exchanges, things like that. Do you think that all of those narratives we were just sort of being hyperbolic and euphoric and they weren't real? Or do you think they're dead? Do you think
Half
they'll
and
come
half.
back?
So, and I think that like on the one hand, the one which I think was the biggest and was right, was that institutions are coming. We talked to a lot of institutions and they all said they're coming. Like that was the order they got on from on high, was do something. We don't know what, just do something in crypto, right? Like take the first step, make it such that we can tell our clients that we don't do nothing in crypto.
It'll look bad. Yeah.
Exactly. And we'll do it the rest later. But that's what matters, right? Is taking the first step. Like it's, how'd you get to an institution heavily involved in crypto step by step, right? And I think even Silvergate, right, which is now basically a crypto institution, basically it's just a normal bank. And it took some crypto customers and it's like, wait, there's a huge underserved area here. And it took some more. Then it's like, wait, this is actually like, this is most of our business now, And so I think that like that's what needs to happen. And I do think that narrative was true then and is still true now, although probably got delayed by 3 months. I think everyone's sort of like FOMOing in less, and so like less desperate to get in. But I do think people are still planning to get in. So that's sort of one side of this. And then I think the other side, there is certainly some hype. And I think that like there were real institutional inflows into Bitcoin. They weren't absolutely massive, but they were a sign of massive things to come. I think that there's sort of like a trickle of interest in Ethereum. I don't think the inflows made it to Ethereum, but I think that there was sort of like signs that there was likely to be future institutional interest in Ethereum. To some extent, though, I think that's not how it ended up. Like how it ended up sort of narrative-wise, I think the narrative, and I think someone posted, I don't remember who, someone posted on Twitter, like, man, like we really just convinced ourselves that this was Goldman Sachs, buying Ethereum, but actually it's just us. And I think that's what happened, right? I think that there's real signs of institutional coming interest in Ethereum, but I don't think the inflows hit. And I think when people saw the massive price increase and were like, that's the institutions coming in, that wasn't. That was the crypto native people buying in anticipation of institutions.
We front ran ourselves on a trade that was never going to happen. Awesome.
Well, maybe it was going to happen too, though. Right. It just unfortunately sort of like didn't happen prior to getting liquidated.
Right. Yeah, but you have to imagine that they look at those liquidations, sort of what you said, and those cascades. And I mean, we had like 2 million individual retail investors basically liquidated and fully, they're smart. So you would think that maybe they see this as an opportunity if the narrative hasn't changed.
Yeah, I think that some of them are. I think some of them are quietly buying some here. I think some of them are sort of like, so note that moving quickly isn't necessarily the strength of a lot of these institutions, right? They have massive impact when they do move somewhere, but many of them aren't like the fastest people to get there. And so I think like that is sort of like a necessary correction on this is like most of them can't sort of opportunistically jump in. Most of them can opportunistically lumber in.
Right. So do you think that we need a new fresh bullish narrative to bust out of this range and start heading back up? Or,
Basically,
because it's,
Yeah, I think so. I think it'll probably happen, but I do think it has to happen.
It wasn't enough for it to be El Salvador legal tender and other companies starting to follow. Is it so sad that we have to sit and wait for Elon Musk to say something exciting and that Tesla's going to take Bitcoin again?
Yeah, right. Frankly, I think that would help. I don't know what to say. Like, yes. That man moves markets, and I mean, he contributed non-trivially to the run up, right, in Dogecoin, and I think like it's uh I think if he really got behind Bitcoin, I think people see it as almost a little embarrassing that like, I can't even get Elon, like he was your one
He was the
huge
guy.
supporter, right?
Yeah.
Yeah,
It really is interesting. You look at the chart, even just simply at price, and price ran from 20 to 42, and then consolidated for a month, and it took a 1.5 billion-dollar buy by Tesla to break that range and break up, and
yep,
now we're just ranging back where we were before Tesla came back in at one point. It's basically like you
right.
eliminated
I mean,
everything, the entire Elon Musk effect, and are back to 30 to 40.
exactly. And when we're at 30 or 40, it's an incredibly bullish narrative, right? The
So
first time,
exciting.
right? And now it's sort of like, we've been here before. Come on, can't we go back up there? And I think a lot of people will say, well, wasn't it so bad then for the space that we had this run up and crash? Like, doesn't that mean volatility is bad? And I think people are just like trying to get the good without the bad, right? They want all the excitement and all the attention, all the new users from running up to 60K. Um, and they're trying to get that without having actually run up there in the first place. And I don't think you do. And I think like, I don't know, it's a trade-off, there's a lot of hesitancy, but like the fact that people are hesitant implies that they're considering it in the first place, which
Right.
wasn't even true for a lot of people prior to the big run up.
I mean, it's crazy. During that run that you saw Bitcoin on the ticker on every mainstream media source, right
Yeah,
next to every other asset. And it was part of every single news story.
no, absolutely. And it's,
Never imagined that it would happen.
yeah, no, it was absolutely sort of amazing. And frankly, you walk down the street right now and like, are people talking about crypto? They might be.
Yeah.
Yeah, crash. People actually might still be talking about it. There's still a lot of interest in it. Um, and I think like, there's frankly more than before any of this started.
Yeah, I definitely agree with that. I 100% agree with that. So I'm curious if you have, I mean, since we are just trading between 30 and 40 endlessly now, 7 or 8 weeks when we're recording this, um, do you have a really strong feeling on which way this will be? And I'm not saying like in the next 6 months, but a year from now, 2 years from now, do you think that we can still hope for up only?
I think so. I mean, you never get up only, right? Like,
Right.
and it's sort of like amazing how true it seemed for a while. But the real answer is, what you can only go up if you can go down, right?
Right.
Nothing can go up continuously forever, or it's a horribly inefficient market. And the answer is it should have just gone up earlier. And what happens is people realize that, and so they start buying in anticipation. The market gets more efficient, but it also means you more quickly reach a state where it's already realized in expectation all the inflows, and maybe it overshot, maybe it undershot, and so maybe it'll sort of keep going up or down. But we're not gonna get up only, but that doesn't mean we can't get up.
Right. But does that to you mean that we had a bull market, we just ended that bull market and we're in a bear market? I hate, by the way, I hate even having to make those
Right.
determinations. To me, it's like we had a bull market up to 65, we're correcting, and now might get another bull market, but that one's sort of over. That's sort of
Yeah,
my
that's what I thought.
approach.
We're kind of like, I don't know, anything could happen next, right? Like, but I do think that on the medium to long term, we still see a lot of bullish things, so to speak, right? Like, there's still the institutions, they still haven't come in, and they're still kind of planning to, and so I do think that's still there, but it's not going to happen tomorrow, and so short term, anything could happen, and long term, a lot of things could happen. Like, that's just one factor, and
Yeah.
like there are still a lot of other things that I think could have pretty big impact.
So I'm curious, totally pivoting. What is the balance of your day to day? You sort of touched on the fact that like you have meetings every 4 hours, middle of the night.
Yep,
Are you, are you trading? Are you running the business? I mean, it seems like you have are you
right,
doing endorsement deals? you know,
right.
you're obviously an
Practicing,
incredible multitasker because like, I don't know, I have ADHD, so I have to do like three things at once, but it's always
yep,
amazing hearing you're typing like kind of while you're
yeah,
talking. And I know that you can do like 10 things at once.
yeah. It's I would say that recently it's been a lot of business things, and sort of what I mean by that is like markets have been more quiet. There's been a lot less sort of like in the moment, like needing to address things. And there's been a lot more like, what's the important thing for FTX? Like, what do we need to be focusing on medium term? What are the products where in 6 months, we're going to be really sad if we don't have them, and we're going to be really happy if we do? And what do we need to do to get from here to there? You know, what do we need to make sure we are starting on today so that 6 months from now, we are where we want to be? And then how do we do that? Those are, I think, the things that I've been thinking about the most. And so we, whereas I think often we'll have like this barrage of like 7 small to medium features planning to release over the next week. Now I feel more like we have this barrage of 7 absolutely massive like business changing features, which we're planning to release over the next year, that we're sort of like working on in the background. And so I don't know if it's sort of more or less per unit time that we're coming out with, but it's certainly like bigger, slower things.
That's really interesting because a lot of people have commented, always in hindsight, of course, that like the best time to build is the quote unquote bear market. I'm not saying that
Yeah.
we're in a bear market, but I have to imagine when price is raging like that, that you
Oh,
have to be
certainly.
fully focused on maximizing all of the
Oh, certainly.
opportunities that
I
come
mean,
with that.
frankly, we're like, look, you could be building out the business, or you could be doing KYC right now. Fucking do KYC, right? Like, I don't
Right,
care
get
that
them
that's
in
not your
here.
job. Like, it's like there's so much, right? And then sort of like things calm down for a bit, and it's easier to maintain. There's just like fewer things that have absolutely massive short-term payoffs, and so it makes more sense to repurpose more of your firepower for the medium term.
Are there any of those things that you're looking to build that you can talk about?
I think most of them aren't super old, but again, one which I guess is the one we decide to leak or something. I don't know. It's like semi-leaked it so many times, but like, I mean, we have broker dealer license, right, in the US. Like, it's sort of, I don't know, pretty clear where that one's headed. And I think that's something on the next few months time scale that we're thinking about. Hopefully having released. So
what does that look like?
So I wish I could tell you exactly what it looks like, and actually, frankly, some of what we're trying to figure out is exactly what it looks like. But broadly speaking, there's a chance to offer more than just crypto products. And we've obviously done this internationally. We haven't done it in the States yet, but we're looking at that, and I think that there's a lot of complicated operational and regulatory questions around exactly how products interface with each other in the States. And part of this is that, like, we think a lot of existing players have made choices that aren't the choices we'd make in terms of how to structure things. You see a lot of non-integrated products. You see a lot of pretty sort of like sectioned off products where it's kind of awkward. And we're sort of, which is very different than like how FTX.com works, right? Where like, by default, it's just like, you got one wallet, you put whatever you want in it, all cross margin, right? And without sort of futures or leverage in the States, it's a little bit of a different story. But I think we're still thinking about, like, I mean, what exactly is FTX US, right? And what I mean by that is, like, when we say it's an exchange for crypto, that means like 12 things, right? Like, it means it's an exchange of wallet, liquidation engine, like custody, clearing, GUI, mobile app, API, customer relationship, AML, KYC. If you, I don't know, you look like stocks, for instance, right? Those are all different, or there's something like different pieces, or like different parts of it, right? Often you have like 6 companies involved in a trade, occupying like different subsets of it. Like, why is that? What's the right way to do things? What are your options? I think those are all sort of like things that we're thinking about, that I don't know that I know the answer for sure to. But I think there's super interesting questions which get to the heart of, like, when we look at the way that a lot of products are built today, they're not how we build them. And why is that? And is there actually an opportunity to do it the way we think makes the most sense?
That makes sense. Watch out, Robin Hood. So I know we're out of time here. Could you tell everybody where they can follow you after this and see what you guys are up to moving forward?
I mean, as always, Twitter is where I am most active. SPF Alameda, and you can go to ftx.com, check out our product, ftx.us if you're in the States. And I mean, all roads lead to Rome in terms of where you start and where you'll end up. So,
Absolutely. Well, I'm glad to see that they've freed you from captivity, because I know that
yep,
you were somehow doing all of this in a hotel room for 2 weeks.
yeah, definitely going a little crazy by the end of it.
Well, I'm glad you made it out. Thank you so much for taking the time to do this, and I'll start prepping for round 3.
Sounds good.
Thanks, Sam.